And hello everyone. My name is Paulina, and today me and my colleague Max are going to cover the UK construction PMI, which will be out in about 10 minutes. And at the current moment, the forecast stands at 57.5, whereas the prior number stood at 57.8, respectively. Cables bullish a little bit on cables on the currency. So cables bullish break on charts has opened doors for a continuation of the corrective rally following a sharp fall in December-January period. The construction PMI, though least important when compared to other two services and manufacturing, could be enough to help the sterling bulls chew through offers, if any, around yesterday's high of 1.4445. Construction activity had picked up in December following a drop to 7-month low in November, largely due to a rise in commercial building activity. The data due for a release today is expected to show the pace of expansion. The manufacturing PMI released yesterday showed the pace of expansion in the activity ticked higher. Hence, there is also a likelihood that construction sector received a positive rub-off from the manufacturing sector. Thus, a slightly better than expected PMI should not come as a surprise. In case the number is horribly weak, sterling could weaken.
As we have had yesterday, even though, as you may remember, the UK manufacturing PMI actually surprised us to the upside. But we will see whether it happens today. It is also very interesting to know because the UK construction sector is quite important for the economy. As you may also know, other countries usually don't publish the construction PMI, but the UK does. That's why we will see. We will see today whether this particular sector grows as fast as it was growing in December. In January, as Paulina has also mentioned, the PMI is expected to decline down to 57.5 points, while some particular financial institutions, for instance, Santander Bank, expects it to decline down to 57.0, while Societe Generale sees the indicator at 57.2. Speaking about the currency pair which we're discussing today, the cable, of course, as you can see, since yesterday we have had a major shift in the sentiment for this particular currency pair, and now the majority of traders are going short actually on the sterling versus the dollar. And in the morning, the distribution between the longs and the shorts was even worse because some 75% of all traders were bearish on the sterling. Now it is 56%, and it compares just to some 40% 2 days ago. And as you also can see, the pound is being sold in the majority of all the cases right now, 51.3%, and it also changed to another side over the past 24 hours. Speaking about the sentiment provided by other market participants, it has also deteriorated over the past trading day, and for instance, Saxa Group sentiment has shifted to the bearish side completely. Speaking about the current market situation, as you can see on the chart, the pair is trading at 1.4365 level for the moment. And of course, as usual, to project the possible market reactions, let's have a look at the previous ones, which took place in the last 5 months from now, so since September up to January of this year. And the average reaction for the cable was 21 pip, which is slightly below the same indicator for the manufacturing PMI, which is quite a decent reaction actually. So something above 15 pips is considered to be quite good one. And of course, in case we have a negative surprise from the data, we can see the pound declining down from the current trading levels, and the first support can be offered by the 4-hour S2 support line at 1.4340. Even though considering the current trading levels, this line is unlikely to be touched. Possibly the pair will stop somewhat earlier and a bit above this line. At the same time, in case we have a positive surprise from the data, of course, an increase in the value of the pound is possible. At the same time, I want your attention to be paid at many important resistances which are at the current spot price, and among them we see the monthly pivot point, the second resistance, and also the weekly R1 pivot point resistance line. So they are very significant, they are very important, and they can stop the pair from growing. So I have just 50 seconds to go until the data will be finally released, and let me just shortly mention the technical indicators, which, as you can see on the 30-minute time frame, the time frame for the current data release, they are showing bearish signals on aggregate. There are only 2 signals to buy and 5 signals to sell the sterling right now. So from the technical point of view. Okay, I think we have some 15 seconds left, and let's just wait for the numbers to come out, and we will see them in the chat section, hopefully as fast as possible. So just a couple of seconds left. So as you can see, there is a downward reaction from the sterling. And because we have a really disappointing data, because UK construction PMI dropped to 55 points, down from 57.8 in December, which is of course much worse than expected. No one predicted such a deterioration in this particular indicator. But I will just remind you that any reading still above 50 points indicates that the activity is still increasing, albeit at a somewhat slower pace than earlier. So speaking about the initial market reaction, as you can see, this one was to the downside, although overall the first minute reaction used to be some only 14 pips to the downside, so not that strong one. And as I have noted, the first support was quite unlikely to be reached, and that's what happened. The pair actually stopped around 1.4350. Okay, I guess that will be all from my side on the technical analysis today for this particular data release. Thank you very much for listening. I wish you all a great day ahead. See you all tomorrow. And I give the floor back to you, Polina.
Thank you very much, Max. Yeah, indeed, the numbers have disappointed us a little bit. We can still see the reaction on Max's screen, and yeah, I would like to thank the guests and participants in the chat section. You've been very active and sweet today. I look forward to see you more constantly here on our webinars, and tomorrow is going to be, by the way, the research webinar, so you're very welcome to join us at 12 GMT. But meanwhile, I would love to invite Ahmed on the whiteboard to continue with his webinar. Thank you, and see you very soon. Bye.